What is up, chat? Welcome back to another CMT lunch hour. I'm Larry Thompson at Hostile Charts on StockTwits. Make sure you give me a follow. And as you join the chat, make sure you start sending over some chart requests, right? We'll get into some of the chart requests. As you saw in the intro, Cowboys, what do? They ride bulls. And that's what we're doing right here. We're riding this bull market. And so the first thing I kind of want to start with today is just a quick little CMT lesson, right? Read all these big books over here to then educate the viewers, kind of give them some insights on how I look at the market from different time frames, different perspectives, intermarket relationships that can kind of help guide your decision making when it comes to the market. So let's kind of dive in here, right? So as we talked about last week, time frame matters, right? And so zooming out, this is a 5-year weekly chart of the S&P 500. And you can see here, we were pulling back to this middle Bollinger Band, right? That's the 20-week SMA or the 100-day SMA here, right? And in the past, during bull markets, these dips are buy signals. And we got another one last week. And what did? We ripped off that level, and now we're back at all-time highs. So once again, pour one out for the bears, right? The bears need their tissues. They need to gather themselves after this week. They've really got to prepare themselves for what's to come in the future. But the lesson this week is time frame, right? So you zoom out, strong long-term uptrend. There's no reason to be bearish the long-term trend, right? And that's the primary driver of the market, is the long-term trends. But when you zoom in a little bit, right? Let's zoom in here and look at the S&P 500, right? This is a 1-year chart on a daily basis. And so as you guys can kind of see here, we have the price action in the middle pane above the 200-day, which, right, good things happen above the 200-day, bad things happen below the 200-day. Paul Tudor Jones, a big believer in that, right? And who doesn't want to trade like Paul Tudor Jones, right? So this bottom panel here is breadth, right? Percentage of stocks above a 20-day moving average. 20-day, a little bit more tactical time frame, right? We want to align the chart we're looking at with the time frame for which we're trading. And you can see here we've had this oversold condition, and when we rocketed above this green line, which was my go signal, we kind of came up here to now we're overbought short term, right? That's how you can kind of look at this. This doesn't mean you need to get bearish, right? We're just aligning our expectations, what we think can occur in the market, right? So now we're at all-time highs, but also breadth is pretty extended. And you can see here in these other times when breadth got extended, right? Short term, right? Still long-term uptrend, like we talked about this chart long term. Short term, you may want to wait for a higher low. Right? This is me using my crystal ball, right? Which is broken. If you guys have a better crystal ball, let me know. But this is the wait for a higher low that I'm getting from this. On the longer term time frame, you stay long. But if you're looking to add to the broader market, I might just wait, right? Wait till breadth kind of cools back off, right? Maybe wait until we get that higher low. So that was kind of the lesson today, is just from the time frame perspective, long-term uptrend, right? And shorter term, we're making all-time highs, bullish, right? But maybe we just don't add here. We wait for a higher low. If we don't get it, that happens sometimes. But I don't think the market's going to rip when 80% of stocks are already trading above their 20-day. Just historically, that's not when the market rips. It rips from these oversold conditions. So that was a quick lesson. Chat, glad you guys are hopping in. It's good to see so many faces that were here last week. I'm glad you guys are hopping in. I'm going to go through a couple more charts here, and then we'll get into some ticker requests. So guys, I love the charts, right? So send me some tickers in the chat, and we'll get popping through some of those here in a little bit. So first thing I wanted to look at what's on everyone's mind, right, is the mags, the big boys, right? These are the drivers of the S&P 500, right? These make up such a large percentage because it's a market cap weighted index, right? We had this base. You guys know I like the base, consolidation, breakout, right? Now we had a consolidation sideways, and we're starting to see this down channel breakout in line with an intermediate term trend, the 50-day moving average, right? So that's kind of how you want to think about it. You want to align your time frame with your chart. You want to look at the primary trend and find a good risk reward scenario that you can line up. And the 50-day was a great one here, right? Or you can also line up with this down channel breakout. So what I would like to see here is follow through, and that could be what leads to this second leg for all-time highs to kind of continue. And so what does the chat think about that? Are people in these names? You guys still watching NVIDIA, Google, Amazon, Meta, right? Tesla, right? 500's coming around the corner. So these are some of the names I'm looking at. And if the leaders of the market, right, the MVPs, the Michael Jordans, the Patrick Mahomes, the Travis Kelce's, the Andy Reids, I'm a Chiefs fan, shout out. When they are on the field, it's hard to bet against the teams, right? So this is a chart I wanted to take a look at. Next chart I'll highlight, right? Just looking at the top 50 components of the S&P 500. Why do we do that? It's market cap weighted. Looking at the top 50 components, similar chart pattern here, right? It's hard to be bearish if you have underlying uptrends that were consolidating, right? Now breaking out. That's not the time to get bearish, right? The time to get bearish was several weeks ago, right? Maybe you weren't adding to positions, but now is a time when looking at these individual charts that we want to buy these breakouts. And so that's kind of what we're looking at here, chat. Other chart I wanted to share, this to me is the epitome of the bull market. It's semiconductors. It's NVIDIA, right? It's Taiwan Semi. And we had this consolidation since last July, right? And this was the bear case. The bear case was semiconductors. The leader of this bull market was correcting. And what do we have now when we zoom out? Underlying uptrend, right? Breaking out, consolidating, and resolving higher. That's what we like to see. That's when we can add risk to the market, when these underlying trends start to resolve higher. And so if semiconductors get going, look out, right? XLK is close to all-time highs. Names within, Marvell looks great. Broadcom looks great. So those are the names we want to be taking looks at as the market starts to resolve higher from these longer terms. So we'll look at the weekly charts for that. Last quick lesson in chat, then I'll start getting to some of these tickers. So keep flooding in the tickers, right? We'll get through those charts today. I want to look at risk on, risk off, right? This is putting once again back on that CMT hat and just understanding what's occurring underneath the surface of the market. And this chart here, right, has the S&P 500 equal weight consumer discretionary, right? Think things people buy when they have money, right? They buy what they want. They buy, new rugs, new furniture, new appliances, things like that. And then the bottom panel is your toilet paper, right? If we're in a recession, your homeboy's still buying toilet paper. I promise you that. But if we're in a recession or the market's about to correct, I might not be going out to eat as much. And so when we look at this ratio and this blue line on a ratio basis, right, we put consumer discretionary, the things people want to buy, over consumer staples, the things people need to buy, you can see that this trends well with S&P 500. And so underneath the surface, we have strong risk on indicators occurring. No reason to be bearish in this type of market from a longer term time frame. Tactically, you might want to wait for some positions, but longer term, this is a bull market and it's just not the time to be getting bearish, right? As price changes, we'll change our opinion, but for right now, these are long-term uptrends. So chat, I see there's a question here about why I use equal weight. The reason you use equal weight is because we want to take those companies within and we don't want the outlier effect that occurs in the S&P 500 where Amazon and Tesla are dominating consumer discretionary. And we don't want other names like Procter & Gamble, the larger companies within consumer staples dominating. We want to look at it on an equal weight basis to kind of strip back those outliers, right? And then when you strip back the outliers, you get what's actually occurring underneath the surface. So that's what I wanted to highlight today, guys. Risk on behavior from the market this week. A market going up is not bearish. There's always going to be news headlines. There's always going to be reasons to be bearish. But when you stick to these longer term trends, right, and then tactically add to positions, that's how you outperform the market, right? That's how we make money here. So speaking of making money, right, let's start diving into some of these individual tickers the chat has ready for us. I'll start with FFIE, Faraday Future Intelligent Electric. What are we looking at? Let me share this, right? Chat, I don't know if you guys aren't learning anything from me here, but these are not the stocks we want to be buying, right? Unless you have some insider information on this chart here, like what are we looking at, chat, right? So FFIE, we have a long-term downtrend, trading at $1.50. Not the type of name I want to be playing, right? Why would we be playing this when we have names going up and to the right, right? This is going down and to the left. Here, I'll give you a quick one-on-one lesson. All right, that's not how you make money in the market. If you're a short seller, sure, but not from my perspective, names you want to be taking a look at. So that's an L, right? That's an L right there, chat. Next sector we'll get to Chart Industries, GTLS. It's a good looking chart, right? You have a longer term consolidation, but primary trend is up in this name, right? $9 billion machinery. I like these industrial names, guys. I do like these industrial names. So chat, your mind's in the right place here when you're thinking about industrial names, right? GTLS, longer term base. Let's zoom in, right? First, let me edit this version, right? You can kind of see here. People will call it coincidences, right? But what they don't understand is technical analysis about studying human behavior, right? We have this round $200 level here. And what do you know? It coincides with levels in which the chart is trying to break out. So against $200 here, I like GTLS on this longer term time frame, right? You have this longer term consolidation. On the left side here, you don't have a ton of overhead supply. And so this could really start to rip to new all-time highs because there's no sellers at all-time highs, right? There's no one to sell. And so I do like this chart, chat. This is a good name to take a look at. If you're in this space, right? I got these tickers. I look at too many charts, so I got them on my head. Look at Deere, right? Check out Deere. Deere, similar pattern here. And this might be a name if you want to have that industrial exposure, right? This could be a name here. We're breaking out on this longer term time frame, right? So good one in the chat there, GTLS. I like that. I like the industrial names, Deere, Caterpillar, Eaton. Those types of names do look good here. So that's a W from the chat right there. Getting to our next ticker, AMSC. If I learn how to type today, right? Chat's getting it. Chat is stacking up W's today, right? Longer term time frame, what do we have here? A huge base. We love these charts, right? Because then we have clean risk reward levels that we can draw against on this longer term chart, right? You look here, this $30 area, right? What do we have? Polarity, right? What is polarity? Polarity is when former resistance becomes support, right? Former resistance here becoming support over here, right? What you might want to do on a tactical basis, I'll zoom in here, but what you have is you have this base on base, right? We like to see these types of patterns, right? We like to see these types of patterns. So zooming in, I like it against 30 on the weekly chart. If we zoom into this daily view, right, we might have a little bit of work to do, but if we get above this 50-day moving average, right, I like it against that $30 level. There might be a little resistance here, but if you're in this for the longer term, that's the type of names you want to be looking at, those longer term uptrends. Like I said, there might be some overhead resistance in this $30 area. Let me zoom in for a little bit for the chat. But I do like this name overall. That's a good name to be keeping an eye on for that breakout. Superconductor. Let's see what they actually do, because I might have some names in the same space that I might like give you guys to recommend. Electrical equipment. Okay, you guys are on the right track with these industrial electrical companies, right? I believe there's bipartisan ruling when it comes to industrial and infrastructure names, right? An ETF I've shared in the past for this type of stuff is PAVE. We can zoom out and we can look at this PAVE chart and you see that similar long-term uptrend. So I like where your head's at today, chat. I like these names here. Now we'll go to a crappy stock that the chat wants, right? Let's look at Moderna, right? Moderna, you zoom out. This is not, right, rewarding shareholders for owning it. This is your COVID over here, right? And guess what? You know, sometimes people talk about fundamentals and news and articles, and people try to keep up with that part of the market. It looks like the chart told you that Moderna was going to do well during COVID, doesn't it? And it looks like the chart told you it was going to do bad after COVID. And what pays you? Price, right? So that's the thing I think people need to understand, is that price is what's going to pay you, and price is the opinion of the public, right? Think about sports betting. What's the opinion of the public? Where they place their bets, right? When it's negative 6.5 for the Eagles, people think the Eagles are going to win the game, right? When it's negative, 1.5 for the Chiefs, when the Bills are playing at the Chiefs, the public think the Bills have decent odds, right? And so where people put their money is what we want to focus on, right? We want to see what people do with their money, not with their lips, right? I can tell you anything with these, but where I put my money is where my focus is. And that's the benefit of charts here. So Moderna, right, if you're looking for a trade in this name, right, you probably have to zoom out really far, like still an ugly chart. Let's zoom into the daily, see if there's anything that's worth taking a look at. Right, I don't really see anything here. We're below the 200-day. We're just getting above the 50 and 20. Right, if you want to manage risk, if you're in this name, you have some information I don't, or you like being a bottom fisher. Right, you know what they say about picking bottoms? It causes stinky fingers. So I'm not a big bottom picker. But you can see here Moderna, right? You like it against 40. That's where I would manage my risk because, right, this is just not something that's done well in recent history. And until something changes here, it's not a name I really like. But I get you if you're maybe balancing some of your other trades, you're looking for some bottom picking, you can manage risk against 40 here. So not a bad one if you're looking more shorter term, but long term, right, it's kind of broken down a decent amount. Let's go to Clove. Beauty chat. You know what? You know I like these ones, right? We like these big bases that are resolving higher with limited overhead supply. Right, these are the winners, right? The charts don't have to be perfect. I'll get into that another week, but there's this thing in the market called robustness, right? Think of it like fragility. You don't want fragile patterns. You don't want patterns that only work if these perfect things happen, because that's not how you build a warrior, right? We want to buy warrior stocks that can overcome a little bit of a pullback, overcome a little bit of penalties. But you can see here, nice base in Clover. Right? Something's changed about this business model, right? Clover Health Investments looks great. So I really like this name, chat. Well done, right? You have this little base on base action, right? Against that $4 mark is probably where I would manage risk. You are going to run into some overhead supply up here on the chart, right? You can see that overhead supply, overhead supply, overhead supply, but that gives you a decent amount of upside. Right, if you do like this name, that gives you a decent amount of upside. So against $4, I do like this name. Right, you can manage risk here against 4. Right, you're risking 10-12%, but that's this type of trade. Right, if you're looking for high reward, you're probably taking some risk. But against this 480, right, it could go up 50% to get to that $8 mark before it really starts to deal with some resistance. But I like this pattern overall. Look at something like ARCF. Right, a lot of these fintech names right now look like this. So good place to be is these types of patterns and have that longer term focus of letting this trend play out. Because, right, if you got in here and then you kind of got shaken out, it's like let this time frame play out and let that reversal occur. Right, you want a great example of that of recent history? Palantir, right? Everyone knows it's a great stock now, but people were complaining about it not long ago. And so here's an example, right? You had the same thing occur. What did it do? It built a big base, right? And then what happened? It started to get into overhead supply right here, started to get into overhead supply in this area, and you just had to wait it out. You had to be patient with this trade. And now it's everyone's favorite ticker. But guess what? We got back in at $14. If you guys go on my stock twits or my Twitter, we've been in this thing since $14. You just let those winners run and you have something like this, which we don't know what the stock's going to do. We just manage risk because we don't know the future. If we knew the future, guys, I would be in the Bahamas right now, right? Because it's pretty cold here in the United States. Soxel. Someone put Soxel in the chart, SOXL, right? That's a leverage ETF on semis. I talked about semis at the beginning. Right, I like semis, but I would just play it. If you're looking to add extra risk, I don't know how I would play it. I like SMH more than I like Soxel, but I see that name in the chat. And then MVST, right? Microvast Holdings, $2 stock, not something I'm going to play with, but if you're trying to manage risk, manage it against $2. That's what I would do, but these are not, I'm not trading stocks that are trading for $2, right? What's the market cap on this name? We're looking at 700 million. So I kind of trade stocks above $1 billion, right? I like to see volume in the names, right? This one has decent volume today. I don't know this story, but aren't the types of chart patterns I tend to trade. But if this is something you trade, I will hook you up with some levels, right? So you have this downtrend that's broken, right? Some people call this a scoop and score. It's not the prettiest in the world. But against like $1 was probably where you could have gotten in and did well, right? If you were looking at it from a technical perspective or it's a name you had on your watch, right? You had the downtrend break, you had the base breakout. That would have been where I got in. But now you have a decent amount of room to the downside. So it's not, I don't know if that's where I would be adding, simply because you look here, right? Let's do an easy base read. You look here, there is some overhead supply in this area. So you could be getting slammed here looking at this chart, right? So I would just keep your head up around this $3 mark, because you can see in the past, that's where sellers have stepped in. And if someone's doubled their money in the past month or week, right, in this chart, there's going to be profit taking here, right? So chat, you can kind of see how that lines up. Let me make these darker red, right? So that's what you want to look at. You want to look at where the stock may move in the future and where it may run into overhead supply. And overhead supply is just a fancy word for sellers, right? May run into some people that are willing to sell. So that's just something you guys want to take a look at. So maybe $3, it might start to run into some issues, but set a trailing stop, right? If this is a name you know more about. But I think there's other trades out there that are a little bit cleaner set up when it comes to the way I look at the market. I see someone in the chat said SOFI. SOFI is one of my favorite charts. So clap it up. Whoever said SOFI in the chat, we got to grab a drink sometime. That is the type of names I like to look at. And I'll just go to my weekly chart on SOFI. I won't even edit one up because I already got the chart up. Boom. Right? This is what I like to trade, guys. I like to trade these bases, longer term bases in SOFI. And what I would say about this FinTech space in general is operators matter in this space, right? Who's running a company like this matters, because essentially all they're doing is giving out loans. So the better data you have, the more user-friendly your platform is, the better you're going to do in this space. And all I've heard is great things about the CEO and the way he runs this company. So SOFI, great looking name. You guys can probably see where I got in around this $10 mark. And then we had this consolidation up here, right? We had a little bit of overhead supply, right? So it's just, are you willing to sit this out, right? So right here I think I had a 25% return, right? And it started going up here, and I saw there's some overhead supply. So you just manage risk against levels that make sense for you. But now it's breaking out again. So against 1650, against the top of this range, that's kind of where I would look against this name. But this thing has all-time highs all over it, right? So great name from the chat. I would just in general keep a lookout for these FinTech names. I'll give you a couple more if you're a FinTech person. Affirm, right? Similar pattern. But what you see here with Affirm is the breakout kind of came back, right? So that's where you got to manage risk. And I'm not giving risk management protocols today. I'm more just outlining levels, right? We had that clear breakout against 50. And if you were in this name and you set a trailing stop, right, we didn't start going down until it was a 30-40% return. So you had made good money here. It's just you got to be good at managing risk to the downside to kind of understand some of these patterns. Another one in the space, Blend Labs. This one kind of failed, right? This is where I talk about the operators being important. It was a cheaper one too, but this one failed to break out, had some overhead supply it ran into. So SOFI, in my opinion, is the best name in this space. So good one from the chat. I do like that ticker a lot. Energy Fuels. Okay. Sideways, right? Just sideways after sideways after sideways, right? Not really money being made in this name from a longer term perspective. And we're looking at oil and gas consumables. It's about $1 billion. Yeah, I don't know about this name, right? Like this is not, does this look like an uptrend? Maybe. It looks like a long-term consolidation, and it's just not what I like to see. So if you're in the energy space, honestly, some of those uranium names look good. I don't know the play here. I don't know why you're in this name, right? You might be in it on a shorter term time frame, right? So let's kind of look at a shorter term time frame. I guess you can kind of see here, not bad in terms of like you're building this little base here, right? But we got to get above these levels, right? There's a lot of overhead supply in names that trade sideways for this long because there's people in and out, in and out, in and out, right? I'll give you a quick example of that, right? Energy, XLE, right? Everyone wants to talk about energy. Everyone wants to talk about inflation and the Trump and the Biden and how they affect inflation. But look, it's done nothing, right? Tell me about inflation when energy breaks out. But this is, right? This is since 2022, energy's gone sideways. So this is in show me mode, right? When the tickers are sideways, it's show me, prove it, right? When they're in uptrends, it's innocent until proven guilty. When they're in downtrends, it's guilty until proven innocent. And that's the way I manage expectations in my head, because I buy high and sell higher, right? I'd much rather buy those types of names on a breakout where I can manage risk against than trying to make some fifth derivative analysis of uranium energy prices that truthfully you don't understand. I don't understand, right? No one understands it, right? If they did, they wouldn't be on TV talking about it. They would be in the Bahamas. So I would just say not a space I'm playing as of right now, but if there is a couple good setups, right? Like I said, I look at all the charts, so I know the setups within. EQT, right? If you like those energy names, EQT is one that is actually breaking out, right? When you zoom in on the chart, it actually broke out. It actually proved it to me, right? A name that's a little extended, but still in that energy space, Kinder Morgan, right? Zoom out on this chart, right? Consolidation long term, but then it proved it, right? It proved it to us. So we want these consolidations to prove it to us. We don't owe this consolidation anything. We don't owe it predicting it, right? Think about the NFL. What do these teams run nowadays? RPOs, run pass option, right? Because what do? They react, right? This game isn't a game of prediction. It's a game of recognition and then execution, right? Famous football coach John Gruden talks about that, right? Communication, recognition, execution, right? So the chart communicates to us what's happening, right? Then we recognize it, the breakout, and then we execute, right? So that's how you want to think about this stuff. That's how I think about it, at least, right? So if you're in that energy space, I think this name looks a little bit better. I see in the chat we have Hood. Hood, another great setup in Hood, right? That base on base that we talk about, right? Huge ripper to the upside. I love this chart. This is a good one from the chat, I got to admit. And I actually talked about this one last week. So if that video's up, feel free to go watch. And I actually talked about Hood as one of my trades last week. And we just been crushing it in this name, right? There's plenty of opportunities to kind of get in. I think one of the things people do is they have FOMO because they look at short-term charts. When you zoom out, you can see the bigger picture story here. So $30 was my level, right? I like those psychological round number levels. And so now it's just running. So you can manage risk against 40. And then if you zoom in, right, these 2 weekly charts show that it's really broken out. If we kind of zoom in here, right? Trading how I kind of like to trade. You had a consolidation here, right? You had this little dip below a key moving average, which we like to see, because what do we talk about, chat? We talk about robustness and pattern recognition. We don't want stuff that is fragile when it comes to moving averages. We want to draw with thick lines, and we want to understand that perfection is not really a part of the market that we want. We want things to be robust, right? Because think about it from a fundamental perspective. The companies that are robust are the ones that can withstand storms, right? You don't want a company that, because GDP drops 0.0000002%, the company drops 10%. We want companies that can withstand these kind of pullbacks. And so this would have been the trade last week, right? We would have traded this breakout and we'd had follow through. And all you do here is you set trailing stops, right? I wouldn't necessarily get in here short term, but if we pull back to this $50 area, or we pull back to this, 20-day moving average, great time to kind of get in Hood. So good name from the chat. Good name from the chat. Yeah. I see some familiar faces in the chat. Want to talk about China. Shout out to Howard in the chat, right? So China, I think, is a play on a couple things, right? A little bit more of chess than it is a poker hand. But if you look at something like KWeb, Chinese internet, you have this consolidation sideways, right? And shout out to Howard for kind of being in the chat, sharing some names. Why do you have this consolidation? Well, look, like we've talked about this whole entire time, you had a ton of overhead supply, right? So with KWeb, what I want to see, right, is if you can manage risk against this $25 level, right, on a longer term time frame, if you like KWeb, right, kind of this lower bound, $25, you can manage risk against. But you kind of see when it's gotten this 35 level, it's kind of gotten eaten up, right? So I think China can move a decent amount without really doing anything, right? I think it can go up. It can go up 18% and still be below some overhead supply. But I do like this higher low here, and I do like China overall. If you're kind of interested in China, I think another way to play it is FXI. I like the looks of FXI just a little bit better here, right? Because I can manage risk a little bit more against this $30 area here. Kind of see when you zoom in on this pattern. So I know certain people want to trade maybe just the internet names, but I think you kind of have this downward, right? You kind of have this down channel here that's breaking out. So this is something, if you are interested in China, FXI might be an easier way to play it, right? And sometimes with these longer term patterns that you're looking at and you want to be in a little bit longer term, you want something that's just a little bit easier and a little bit cleaner. So I think this is a pattern here. You can trade this against this lower bounds in terms of China trades. So here against this 29 bucks, right? You're risking 5%. And if this goes, right, I think this can really go because the sellers here is kind of where the sellers came, but this one is making a higher low once again. And I think we can rock it to the other upside. The other thing I'll add in, I haven't talked about it much with the chat, is when you're analyzing momentum, right? RSI is a momentum oscillator invented by Wells Wilder back in the 70s. He has a book. If you're interested, I can send it into the chat afterwards. But see how RSI here is staying above 50, right? That's a change in character, right? We look at this, we see this change in character. RSI is staying above 50, and that's what you see in strong uptrends. And so I do like FXI overall as a play here against this 29.28 level, clean levels to manage risk against. So shout out to Howard looking at some of these China trades. I do like FXI. Other one he wants to call out is BABA. Let's take a look at BABA real quick. BABA, similar, right? Similar to that K-Web, very similar chart and under a ton of overhead supply. But if you like this name, zooming in a little bit, right? If you're looking a little bit more tactical on this chart, there's clear levels, right? There's clear levels, clear trends here. If you're kind of into something like this, right? There you go. All right, it's kind of this 90 level, right? It's really kind of 90 more than anything. I would say it's that 90. You get above 90 there, you have that clear scoop and score pattern a lot of people talk about kind of here, right? Not the prettiest in real time, but you get it, right? You kind of came down, broke this lower bound of 200-day moving average, failed move leads to fast moves in the other direction, right? Once you have the fast move in the other direction, the next step you need is follow through. So what we want to look for here is follow through above 90. And so against 90, I would like BABA long against that $90 mark. And we can kind of see it working its way. Another thing I'll highlight for the chat, just CMT knowledge here, right? We'll talk real quickly about this, is this price, right? So talking about momentum again, momentum made a higher low, but look what price did. Price made a lower low. And that's what we refer to as a momentum divergence, right? So we made a momentum divergence, and then you have this scoop and score pattern breaking out. So shout out to Howard Linzen in the chat for sharing this name, because I do think we get above this 90. You have really clean risk reward. If you do want to manage risk and get in now, you can manage it against these lower bounds of these moving averages, this 84, 85 level, and a ton of upside in China. I think the China trade is just an asymmetric trade to the upside because there's a lot of reasons, but if you think about game theory, who manages money? A lot of Midwestern folks from Kansas City. A lot of the large firms sit in Kansas City, and they tend to be a little bit more conservative crowd in general. And so what you have with a conservative crowd is the ability for them to tell their clients, hey, look, they can sell the story. Hey, look, Trump's back. We all know the art of the deal. We all know blah, blah, blah about Trump. We all know the tariffs aren't going to be as extreme as people think. And so let's increase our exposure to China here. You've made a lot of money the past 2-3 years being in mega cap tech. There's a lot of value, deep value down here. Let's just sleeve a part of your portfolio into China this year. Not as hard to sell when The majority of voters voted for Trump. The majority of financial advisors in the Midwest that manage money probably also did so. The majority of their clients, we know from just looking at the graphs of who voted, also probably did so. And so I see that as like a story and a narrative that if it catches flames, it can really go. And so that's a little bit more narrative and a little bit, but like I said, some of the charts just kind of got to show you what they want to do. This is RXRX, pharmaceuticals, right? Not the prettiest pattern in the world here, right? You have a ton of overhead supply. It's just kind of messy. This is not, pharmaceutical names don't tend to lend themselves to good technical analysis because they're so news driven that, right, you can have a great uptrend and then an FDA trial comes out and it's bad news bears and this stock could be down 50% tomorrow. Or you have the opposite happen, right? So RXRX, not a name I'm super interested in, but I do want to highlight what I'm talking about here when it comes to these types of names. Novo, right? Novo Nordisk. NVO, right? This is, you want to talk about a downtrend, right? Strong downtrend, but they announced something today about some drug, I believe it was related to weight loss, and it pops 8-10%. So it's just one of these things that the pharmaceuticals in general, not a place I like to dip my toes in. I like to apply technical analysis to boring names a lot of times and a lot of long-term boring uptrends. Like, you want to talk about sticking with healthcare for a minute. Let's zoom out and take a look at Cardinal Health, right? Cardinal Health, pharmaceutical, well, a supplier, right? So they're not actually in the biotech space. They're more actually just like healthcare provider in terms of like healthcare services and products in the US. But these are the names I want to look at when I'm looking at healthcare. I want to look at the boring businesses that we know, right? Manage cash flow, understand business model, have a natural inkling to go up because people in general are going to spend more on healthcare over time. Whether people get healthy or not, they're going to spend more money on healthcare, right? So just understanding this, because people have to pick up their healthy drugs the same place they pick up their bad drugs when it comes to kind of that perspective. But if you like some healthcare names, Cardinal Health is one I would actually recommend, like right here, right? Breaking out against that 125 level in terms of healthcare drugs, right? You have that polarity level, which looks great. And you have the ability to manage risk, which looks great. And you have that long-term uptrend, which is what we like to see, chat. So Cardinal Health, if you're looking at some healthcare names. So yeah, shout out to the chat for that. FSLR, First Solar, right? This thing's been a turd. And so not a chart I love to trade because what we had here is what happens when you're trading, right? When you're investing and trying to make money in the market. You had what looked like a great breakout, right? From this level here, great breakout. And then the breakout failed and the breakout has yet to find support, right? So this is just a hard name for me, right? It's down 11-12% this week. If you're looking to short this, right, or if this is something that you like short, you do have a nice down channel, right? Lower lows, lower highs. So if you're in this short, good for you. I would stay short, right? I would keeping this name short unless we get back above that $200 level. But this just isn't something I would trade until it got out of this down channel, which kind of lines up with $200, right? Another psychological level, because that's all charting is. Charting is just the pictorial representation of human behavior, right? And human behavior is erratic at times, and other times it's boring. And so that's just kind of what this represents. Not really a trade here, I see, from a long perspective, chat. So good chart overall, though. I see a couple more names coming through, chat. I'll do about 2-3 more tickers, and then I want to get to my trades of the week. And so I'll do a couple more here. Someone mentioned Deere. I went over that earlier. Love Deere. Great consolidation breakout, right? That's what we want to see when these things consolidate, is we want to see that breakout. So zoom in here in on Deere. You can see the breakout. So you can manage risk against this 460 level here, right? So I do like Deere overall, chat, as a trade. And then PSIL. Psychedelics. Okay. Shout out to Aaron Rodgers in the chat. We got Aaron Rodgers in the chat. Preaching psychedelics over here. So honestly, chat, I don't hate it. I don't know if I'm tripping or not, but I don't hate it, right? You have your base here. You have that potential for a scoop and score pattern. So if you know something I don't, right? Or if you're really a believer in this space, I think wholeheartedly you got to manage risk against 10 bucks, right? Against this $10 level here on the bottom panel. I think against 10, you got to manage risk, right? Kind of see here how that was an important level. But it looks like you have a ton of upside, and it looks like there's not a ton of overhead supply once you get over 15. So honestly, keep an eye on psychedelics, right? I do know there's research out there that is proponents for this type of medication and medicinal use. And right, if we have a pretty aggressive president when it comes to deregulation and things, you might see more trials, more drugs. So keep an eye on psychedelics. This is one that I'm going to put in my little shelf, right? I'm going to write the ticker down right now, and I'm going to set an alert for it when it gets over 15. And so, yeah, that's a good name, chat. This is one I didn't have on my radar, but I would kind of keep an eye against psychedelics, against that PSIL. I guess that stands for psilocybin. Is that the drug, chat? PSIL, I would keep an lookout for against 15. I'd probably just set a reminder there against 15. So very small ETF, has about $7 million. So I might just, right, keep your eye on it. Or if there's individual names you know can benefit from it, maybe play it that way than this ETF. But overall, don't hate the psychedelic name. So shout out to the chat. Just want to clap it up for you guys. Thanks for sending over some tickers. We have some great names within there that was being shared. So I'm going to get back to a couple of my trades of the week, and then I will let you guys go. All right. Enough of your charts. Let me share my charts, huh? All right. Energy. Some people mentioned energy in the chat. Take a look at CCJ, uranium in general. Put in on Twitter or ChatGPT, just look up nuclear names, right? So something to keep an eye on. This is a huge base, 25-year base here, right? Or sorry, since 2007. This is a long-term base. And if this thing breaks out, right, we could really be off to the races in this name. So just started watching Fallout on Prime. Chat, have you guys seen that show? It's actually pretty good. So I'd keep an eye on uranium in general. CCJ, a name I do like against this $50 level, kind of like we talked about. Another thing that people are sleeping on, right? You guys are sleeping on gold. Everyone wants to be in energy, XLE. XLE needs to prove it. You know what's already proved it? Gold, right? If you're an inflation person, right, it might not have worked last cycle, but I actually think it do. I think it was early, right? I think it was early to the cycle. But look at this big base breakout we have here, right? These are the types of charts I love from a longer term perspective, because you go from 180 to 256. That's not bad, right? And also you do that without correlation really to the S&P 500. And so gold is a name I do like. Just keep on your radar if you're not following GLD in general. This is a longer term chart. I know it's kind of off to the races now, but something I like. Also, huge area of interest, thematic play. Right? You want to get caught up in the AI. What does AI need? What do people using more and more computers need? Cybersecurity, right? The reliance on computers is only growing in the United States. And guess what? The more money that goes into something, the more people are going to try to take money from that thing, right? And so we know that's to be true. So First Trust Cyber, NASDAQ, Cybersecurity ETF, Cyber. You can also look at Crowd, look at Palo Alto, look at Hack, HACK, another ticker related to cybersecurity. So I like cybersecurity here. Just keep that on your radar. This past weekend, I looked at 1,500 charts, and one that stuck out to me was Corning. I'm in this. I was already in this name this past weekend, so disclaimer, like I was already in it, so it's kind of broken out this week. But this is why we look at these bases, right? Clean levels to manage risk against once it did this, and then, right, boom, up to the upside. It's up like 18, 19% in 2 weeks. We like these bases because they could continue to run, because this is a long-term uptrend. Last week in the chat, someone brought up Weave Communications, WAV. Great looking chart here, right? We have this consolidation today. I think if we break out here, it's going to continue to the upside. So look at Weave, look at this base, right? Base, breakout, consolidation, right? That's what we like to see. Consolidation then leads to primary resolution in the underlying trend. The underlying trend is up. Great name there. Spotify, right? Reports earnings in a couple weeks. Netflix just reported and crushed it, right? What's Netflix up this week, chat? Netflix has been killing it, right? So that's a name that I do like here, right? Netflix reported earnings this week. It's down today, but overall, right, reported really good earnings and kind of accelerated some of their potential. So I like Netflix here. I like Spotify here for the same reason I like Netflix, right? I can do without Netflix. I can't do without music. And so I just think this is a theme. Look for this resolution out of this consolidation. And that's kind of what this pattern does in general, right? Consolidate, breakout, consolidate, breakout. Another name, self-driving technology, Aurora. For my Yinzers in the chat, sorry for being the most middle average football team for the past decade, but I do like this Pittsburgh-based technology company overall against $6. And then I talked about the FinTech names in the group, right? Look at Coin, Shop, Square, Hood, SOFI. And you can own them all in ARC-F, right? I don't recommend none of this is financial advice, but I look at these ETFs to understand what the bigger picture is, and then I look at the individual charts, right? And we saw some people today in the chart talking about Hood, right? We saw some people talking about Shop, talking about Clove, talking about these FinTech names, right? And they look good. These FinTech names look great. So something to keep an eye on here is ARC-F, the holdings within. It has that base on base breakout pattern that we like. And then this was my trade from last week, guys. I kind of highlighted GE Vernova, right? Energy space. Some people mentioned energy names today. This is a name. This is the picks and shovels of the AI world. GEV, GE Vernova, it's spun off from GE, right? And this is a chart that just looks great in my opinion, right? You have the you have this consolidation underlying uptrend that is starting to resolve to the upside. And so that was a name I shared last week. And what did we have? We had more upside, right? And then now is maybe where you set a trailing stop, right? You can do that many ways. You can use a moving average. Chat, some homework this weekend. Look at chandelier exits. Chandelier exit is a pretty unique technique for using volatility plus a trading range for having a trailing stop. And then the last chart I wanted to talk about today was Deck. Decker's Outdoor. So a lot of people on here probably have Hokas, right? In the chat, if you have Hokas, tell me what you think about them. Are you guys a Hoka crowd or on cloud crowd? Or are we Nike, right? Nike kind of looks terrible, but Hokas and on clouds have really taken the shoe market by storm. And Deckers is the holding company of Hoka. They own Hoka, they own Uggs, and they own a couple other brands. And so they report earnings next week, next Thursday, right? But what do we have here? This base breakout, right? And then a consolidation. And then we had all-time highs yesterday. It's kind of consolidating a little bit here, but look for names like this to most likely resolve higher when the underlying trend of the market is up, when it's risk on behavior, right? We expect these strong stocks to resolve in the underlying direction of the trend, which is up. So that's what I like to see here, chat. If there's no more tickers, I probably won't be able to get into any more today. But I did just want to say thanks for coming out, and I'll be back every Friday at noon. And if you want to follow some of my work, go to StockTwits, right, and go to @HostileCharts, and you can follow my work. I put out 50 setups. So I went through 1,500 charts last week, and I shared 50 setups, my favorite setups from a weekly base, right, those bases I like to share, right? So like this was in the GE Corning, GLW Corning. This was one of the names I shared in there. So go to my Beehive, and it's called the Chart Bonanza. I shared out the Chart Bonanza as 50 good-looking setups within the S&P 1500, which is the 500, 600, and 400, the large caps, mid caps, and small caps. And you can get access to that. And then I'll have a new post coming out tomorrow highlighting what I think about the market. But overall, clap it up for the chat. Another week down. And yeah, get the tissues ready for the bears because it's a bull market. So cheers, guys. Have a great weekend. See ya.